Biggest story by far is the United H blowing up, down 11%. It should be the kitchen sink. CEO's gone, guidance is gone. So we'll see. I still don't think United is cheap enough, to be honest. Coinbase joins the S&P 500. I'm not sure that's... NVIDIA's traded 11 million shares, up 1.6%. JD is flat on 6 million shares. Tesla's up 50 bips. We also saw the Elon robot demo. Robotics is going to be the next big bubble. Rigetti down 11%, terrible earnings. Reported just 1.5 million in revenue, 5 million shares there. Big disappointment, but who knows, maybe it'll rally. Apple's down 20 bips on 4 million shares. The crazy old regen cell keeps pumping. It's a Chinese stock with very little going on in terms of float, so not a real price. I would not pay attention to it, to be honest. D-Wave up, astonishingly up 4%. Really good short opportunity there, as the landscape for quantum is very minute. The Rigetti CEO even said you shouldn't even trust any other company's quantum revenue, let alone ours. There's nothing real about this. I don't think UNH is a buy. When you have a situation where healthcare, you're making this huge bet that the healthcare system won't change. Let's look at UNH again, I guess. It's really tricky to sort of assume that it's not as cheap as it looks. It got really expensive. It's only down another 10%, from yesterday. So it's not like the valuation's really changed much at all. But these stocks used to trade for 8 times earnings. So 14 times is not actually that cheap. Nice. Good morning. Vertex, great company. I think over time they can probably change the pain landscape the same way they changed the cystic fibrosis landscape. So it's probably a good buy. Cystic fibrosis is like just a fortress for them. It's never going to go anywhere. So you sort of get everything else for free. Yeah, I'd almost be short UNH, to be honest, Chris. You can't grow lives if the country's shrinking in population. Yeah, HIMS is the big momentum champ. Wow, look at QBTS. It was at 9 this morning. Rigetti just showed that they're not a business, right? Like, I'm just looking at lots of different prices. Tanner, it's not they're just prices. Most Wall Street trader screens look like this. Everything is not macro because you can hedge. If you're short Rigetti and short D-Wave, you should be up, right? Because that's a negative on average, right? That's still negative 3% for the two stocks, right? And then if you had a couple longs, you would be up if you were shorting these three. That is alpha. The D-Wave guy is, not acting right. Yeah, I think there's going to be a stockholder transition for SAREPTA where a lot of the fundamental biotech growth guys are getting out, and then you're going to have a lot of value guys kind of getting in. Yeah, risk. I mean, that's the whole idea of factor investing is like risk factors do trade together. That's what a factor is. So momentum is a factor, and momentum's on fire right now. Poor little HUMA site. UNH is still 13 times on peak earnings. So yeah, I think quantum will sink back down. I don't see why. Momentum is permanent. The question is, where is the momentum? There's always traders looking for momentum. It's just a question of, where is it? Where can they find it? It's an evanescent thing, right? Like, yeah, everyone's looking for the next NVIDIA or the next Palantir. There's not going to be too many of them, but it's exciting to potentially find one. So that's what people are doing. Where can I find it? When is it coming? And then, there's a lot of, when momentum shifts to go somewhere else, they'll leave too. They used to be in cannabis stocks. Look at Tilray. This was my biggest short a while back. Look at this thing. It was a $200 stock briefly. It's 46 cents now. Did any of it make any sense? No, but you wanted to short it at the peak, not the bottom. Yeah, if you keep buying those SAREPTA calls, you'll probably get paid if they get bought out or something, but I don't know. Obviously, you shouldn't ever buy a stock because you think it'll be bought out, but the system is being very stubborn. If you believe, in your position, you believe in your trade, then you stay in. If you didn't have any belief, you should have very, very be willing to get out really quickly. Japan's a big pharma country. It's like 10% of revenue. It doesn't hurt to have approval there. I don't know if it's over for UNH, but it's certainly spooky what the hell's going on. And I'm not paying 13 times for no growth. Yeah, I think it's a short squeeze, and also look, it's a great company. I mean, people want to buy these great companies like Robinhood and HIMS and Palantir, and they're willing to buy them at any price. That's kind of the point of momentum, right? Is like, doesn't matter if the stock's 30, 40, 50, 60, 70, 80, it doesn't make a difference. I don't know if the market's going to crash. I think stocks are expensive, but Trump's tariff talk has kind of calmed down a lot. I would definitely take some money off the table if you're long HIMS. I mean, again, great company, but the stock's a little ahead of itself. Would rather own it in the 40s or 50s. I would say 40s or 30s, but we're now in the 60s. So this is not I don't think this is a generational company. I think the management team is very good. So that could make it a generational company, so to speak, but they're in a tough spot. Being in basically telepharmacy, telehealth it's a really kind of crummy space to be in. I don't know when to get out of IVVD. Like, these really small cap biotechs are like $0 call options. They just have permanent, they have no decay. They're kind of fun to own, some of these, if you actually can find one that has a management team you can stomach. I don't know if you should sell Google or not. Telehealth's a little crummy just because a lot of people think the barriers to entry aren't there. Obviously, they built quite a brand, but the margins are really high for what they're offering. So the question is, are these customers price sensitive? Is there a limit to how much you can do on telehealth? Probably. Just because Amazon is your competition doesn't mean you can't beat them. It's not hard to just get a list of every biotech and just look at every single biotech. And then from there you can... Evaluating a management team is tricky. It's one of the hardest things in business. It's kind of like the $64 billion question, right? It's really nothing more important than evaluating management team. I don't think it's hard to have a fundamentally driven crash based on valuations. I think you have to have bad numbers, and numbers have been good. Yeah, I mean, they're very savvy management. I guess the reason telehealth is hard is because everyone else has gone bankrupt while these guys have somehow made gigantic revenue and earnings growth. So that's what makes me think they're a great management team. Everyone in the space is dying, and you're sitting there putting up record numbers. That's Kobe talk. Kobe! SPY up 26 basis points. Quantum worsening here. Our little IVVD has gone up, 50% in just a few days? Kind of crazy. HIM's just on a complete rocket ship. As is Palantir. Palantir's at all-time highs again. Yeah, AL makes a good point. HUMA's a good short. So HUMA reported $150,000 of their little vascular device. $150,000 of revenue. HUMA did even worse than D-Wave and Rigetti. Jonas, it's unlikely that they're faking their revenue. It would be quite the scandal. That hasn't happened in America in an American publicly traded company. It has not happened in a long time. It is happening a little bit with some of these Chinese stocks that are public in the US, and we can't really trust their numbers. Yeah, AppLovin seems to be doing just fine. How they get their amazing special sauce, it's a little bit mysterious. Make an awful lot of money for... I think you should short D-Wave, yes. I think it's one of the best trades in the market right now. Yeah, I think they just know how to hack the Meta platform better than anyone. No, Big Pharma will not manipulate this. You can't really... you can't really manipulate stock prices anyway. I'm not aware of any way to manipulate a stock price. You guys are conspiracy theorists. What does manipulate mean to you? How do you manipulate a market? Markets are self-defining phenomenon. They're just machines. So you either have the capital to move the market, or you don't. But you can't manipulate it. Doesn't make any sense. Manipulation, buying stock when other people are short is not manipulation. It's just, you don't know how much more room the shorts have for liquidity. The shorts might take you out all of your demand and short even more. Or they might give up. We don't know. All you have to do is watch QUBT and Fartcoin and Morgan Stanley covers IonQ? Oh yeah, Morgan Stanley's doing banking business with them. Morgan Stanley's getting that bread. Even Morgan Stanley has to get paid. Yeah, Needham is a complicated bank. Good people, but again, a bank has to do what a bank has to do to get its business. You can't. That means hiring a guy and say, you're writing a buy report today, but I don't like the stock. I said that report has to be out by 5 p.m. But the stock's a dog. When you think about putting that sell rating, that's not getting, sell ratings don't get the bank business. Buy ratings get the bank the business. Yeah, I don't manage traders anymore. Maybe we'll get back into that business, but yeah, I would not be thrilled if somebody was buying these stocks. I did not get a chance to really form an opinion on ARQT. I will say that the lack of IP kind of distressed me quite a bit. That's an old drug, so I think that could be a short. But I'll do some more work. I'll do a little bit more work on an MS. Yeah, nobody wants shorts on the sell side. The banking clients rule kind of They kind of control everything. Oh, IVVD is one of these stocks where like it shoots up, it feels like it's going to go up forever, then it just drops and goes back down. I think you have to, don't be a pig and, you know, just sell it when it goes up like this, and, you know, always keep a little bit. But, you know, I think a lot of people like trading HIMs and some other things. When I trade, what's most effective for me is trying to capture most of the move. I think you can't blame yourself if, let's say, you buy stock, let's see, something like this happens, and you identify this kind of buying spot. I don't know, let's say you buy stock here, okay, because you think you're going to have a rally, and it kind of drops a bunch, and it goes up here. Well, again, you know, nobody can time the market perfectly. So the error bounds around the times when you feel like you're wrong. So here's the purchase price. There's some error bound where you say, I'm wrong. And there's some error bound where you're willing to say, I'm right. I'm still right. I'm wrong right now, but I'm going to be right. And, you know, because if you make your error bound so small, you're going to stop yourself out every second. And nobody's that right. But if you make your error bound too big, you basically say, I don't care if this stock goes to $1, I'm still willing to buy it. I'm still willing to call myself right. So over here, you start to think, okay, maybe am I wrong? You know, is it over? And then over here, you're breaking even and you say, I don't know, you know, should I get out? You know, I got my money back. But let's say you sell, let's say over here. This is a good trade, right? You bought here and kind of sold here. That's a trade. It's great. You like that. But then when it's up here, you start to ask yourself, why didn't I hold on to it? Well, that wasn't your goal. Your goal was to buy the stock and sell it for a higher price, and you did that. If your goal was to buy the stock and hold it for 10 years, then you didn't do that, and you probably did do something wrong. But if you had a successful trade, especially if the IRR is good, if this time period was a short time period, you should be thrilled. What you want to avoid is losses, you know, but not making enough gains is not a big deal. Yeah, you might regret it a little bit, but it's not that big of a deal. So anyway, let's say, you know, you shorted a stock, you shorted down here, and, you know, you just feel like this is your error bound. And after enough errors, let's say you stack these up. Oops. A little, I don't know, about after 2 or 3 of these, you could probably start feeling like, all right, I can clearly mess this trade up. And I don't think you have to wait. I think you can just get out, because you're going to have lots of these, right? And so you book this as a positive. So wins, losses. Okay, I got 1 win from this guy. Then you get out of this and you say, I have 1 loss. All right. And just keep doing this over the course of a year. You might have, at the end of the year, 91 wins and 81 losses. This is a really profitable trader. I think what you don't want to do is say, I need my wins column to be all wins. That's just not going to work. So I'm going to avoid taking the loss. I got 1 win here, but I still have this loss just waiting to be taken. And I had another win, maybe I had another loss, but I'm really refusing to capture my losses. So I keep adding them, maybe occasionally take a loss, but I've got like 5 or 6 losses down here that are still germinating, but I haven't taken them yet. So I want to keep waiting them out. But the problem is these are probably your worst trades, because clearly you got something wrong, you know, but you're going to let it stay in your portfolio and let it corrupt. And when clearly you got something wrong, you don't understand the fundamentals as well as you thought you did, or something like that. It's okay to have a few of these, but you also don't want this to be disproportionate. So if you have no winners you're waiting on and only losers you're waiting on, and then you only have winners you've booked and you don't have many losers you've booked, you probably want these to be symmetrical. So if you just are willing to book winners early and then not willing to book losers until they become winners, that's generally a really good recipe for losses. And in fact, you want to do the opposite. You know, you kind of want to let your winners run and kill off your losers more often. But it's hard to do mentally, especially for very intelligent people. They tend to want to be proven right. It's hard to admit you're wrong sometimes. And admitting you're wrong is the most important thing there is in trading. Some people go even more extreme, and there's some people in this chat that like to mention this. You know, there's some people that say that, look, the point of the trade is to make money. The second you're losing in the trade, you're wrong. I don't think that's right. I think that's too extreme of a viewpoint. But the point is still taken, which is, you know, you're not trading for fun. You're not trading for intellectual stimulation. You're trading to make a profit. So you don't want the stock to go in the wrong direction, especially if you don't have super conviction. But even if you have super conviction, you certainly don't want the stock to get too far away from you. And, you know, that's just kind of the nature of trading. But stopping losses from growing is maybe is definitely just as important as keeping your winnings growing or finding winners. So, all right, we got quantum down a little bit now. SAREPTA is extremely high conviction for me. I have zero fears or doubts about this one. And the nice thing about longs is their position size goes down as they go down. So you can actually keep topping it up a little, but shorts kind of get bigger as they go up. So you get a little crowded. Yeah, that's exactly what I'm trying to say. Jeremy said it even better. If you think you're right about a stock, but nobody else thinks you're right, you don't get paid. So some people want to find something called a catalyst, but I think catalyst is basically a fake concept. Markets realize things over time. Sometimes markets realize things faster with certain kinds of news or like patterns of news. I think like sometimes there is a hardcore catalyst, but it's often kind of not really true, in my opinion. If people know about a catalyst, then everyone knows about it, and it ceases to be a catalyst. Take losses, I think, is like the best thing you can do in trading. Just start to trick yourself into loving taking losses. Just taking small losses, you love it. Oh, that's great. I'm so happy I took this small loss. The human mind is not conditioned to think that way. That's why trading is hard. I think time is in the catalysts, but markets are tools that get more accurate with time. The market at a nanosecond is not very accurate, but the market at 5 years is very accurate. It's very seldom that a stock will stay irrational for 5 years. It does happen. It has happened, but over 5, 10, 20 years, you know, needless to say, there will be but yeah, I think the goal, a lot of people don't understand this, which is really interesting. When you're trading, one of the main goals is to actually maximize the amount of trades you make, which sounds kind of crazy, but you try to maximize the amount of trades you can make while you're maximizing a few other things. You're trying to maximize, you know, your turnover or the amount of trades you're making. But of course, you're also trying to maximize the number of times you're right. And then you're trying to maximize kind of your profit when you do win and your losses when you do lose. You're trying to minimize the losses and maximize the profit. So you're kind of what your slugging ratio is, if you will. You know, when you do get the hit, do you get a big hit, or are you just taking a small, quick profit? And when you do get a loss, are you getting smoked, or are you taking a small stop loss? You know, because you could have a 90% win rate, but if this is like, I make 1K when I win and I lose 100K when I lose, that 90% win rate doesn't help you very much. And then here, as long as all else being equal, you want your turnover to be as fast as possible. And you want to make 10 trades a day, or do you want to make 1,000 trades a day? Well, if the other two parts of the triangle are in good shape, you kind of want to make 1,000 trades a day. If you can not hurt this, right? Nobody has a 90% win ratio other than maybe Buffett, because he makes 10 trades a year. If that, let's say you have a 60% win rate. You know, maybe from going 10 to 1,000 trades a day, you might lower your win rate to 51%. And you just have to think about, well, does that help me or hurt me? You know, at 60% win rate, maybe P&L looks like this. Maybe you make $5,000 on trades you win at, and you lose $6,000 on trades you lose at. So if you're making 10 trades a day, that means you're making $50,000 on your longs. Well, you're actually making $60,000 on your longs. You make 6 winning trades and 4 losing trades, right? 6 times 5K is actually 30,000. And this is on average. And then, you know, your 4 trades you lost money on, you're losing 24K. So your net profit 6K every day. That's a pretty good trader. You know, 6,000 a day is around 1.2 million a year of P&L. This is great. So the question is, how does this trader make more money? Well, he can either up his win ratio. He can try to lose less money when he does lose, or make more money when he does win. Or he can trade more. So if he could add a 0 to all of this, he would actually go up to 300K, 240K. The problem with adding a zero is the trade quality will probably suffer. And this is a lot more interesting, right? This is a $6 million P&L a year. Actually more, it's like 12 million. This is almost a professional level P&L. So, but the problem is if you say you need to do 10 times more trades than you're doing before, you're going to say, well, I could do that, but it's going to look a lot more random. And we could do that math. So let's say, you know, at 51%, it's, I don't know, 5K versus 5,500 in losses. And now again, we have 1,000 trades a day. So 510 are winners, 490 are losers. I'm making 5K for these. I'm losing 5,500 for these. What's my P&L? This may be negative, right? This is 2.55 million a day in profits. This is like a quant bot. And this is 2695. You'd be out of business very quickly. So you say, I know my trade quality would drop so much that I don't want to do this. I would lose 100 grand a day. Huge losses, catastrophic losses. So maybe it would be 53%. I don't know. You can set the break evens for what you could profit on, but you can think about doing this math for yourself. That makes no sense, Martin. So I learned this from maybe the best trader of all time. So maybe you can explain to me what you don't understand. But you want to maximize turnover, you want to maximize win rate, and you want to maximize slugging ratio, all else being equal. They all impinge on each other, obviously. It doesn't matter how you trade, right? Whether it's fundamental analysis, charts, quantitative investing. Nothing went wrong. There's one stock in my portfolio that went up a lot. I love this guy. He asks me a question, then he says, be right back. What am I supposed to do with that?